Welcome, everybody, to another episode of the Industrial Insights Podcast. I have Nikhil Sathe with me with BGSA, and that's Ben Gordon's firm, who is a guest that I had back in 2022, and a firm that specialized in the supply chain and logistics sector. Then unique business that's separate from brokerage business is it's an advisory firm that handles a lot of M&A and has a unique perspective on the capital cycle and where logistics and supply chain companies are at and operating and the challenges that they're going through. So Nikhil, thank you for being with me today. I appreciate you spending the time.
Pleasure is entirely mine.
And Nikhil is someone who has been an operator and been an advisor. And as I was going through where you've worked, Nikhil, I was like, you have forgotten more than I'll ever know in this industry. So I was hoping you could help people understand a little bit. The ones that leapt out to me was Armstrong and Associates, just because they're in that 3PL space, and
Yeah.
we focus a lot on that space. And then XPO, I was fortunate enough to interview Mark Manduka as a CFO of XPO. So I have some good experience there and knowledge of them. Maybe you can help us just understand some of the background of and that shift from operations to advisory.
Thank you, Justin. It's a pleasure to be on your podcast. My little bit of background, I've been in supply chain and logistics now for over 35 years, many years in financial stewardship role, in CFO roles, right from Air Express International in South Africa to Kelron Logistics, which became XPO. XPO was the third company that XPO bought in 2012, and then to Genpro for many years as a CFO. Last few years, I've been an investment banker with Armstrong, more on the buy side, and now with BGSA, which is obviously a strategy-led M&A firm working with leading CEOs in the supply chain and technology sector. So I've really enjoyed my ride. You know, being an operator, understanding the space, deep down as a CFO, as an operator, it helps you a lot to really understand the intricacies and the details behind the P&Ls and the valuations and the capital structure and the type of the quality of the assets and so on. So it's a real blessing to be an operator coming into investment banking. So I think that's a little bit of background about me.
You know, we will be on the landlord side and we'll be doing leases, and we always get the financials for a 3PL company. I'm just going to call you next time we get financials and have you take a look at them, because I feel like you would have a better perspective sometimes. And a lot of people, they gloss over, they look at the main lines, and then if you don't know what it consists of or is made up of, it's hard to really have a valuable perspective sometimes.
Absolutely.
So what's your role on the day-to-day?
Well, as I said, BGSA is a strategy-led M&A firm working with a number of CEOs in the supply chain and technology sector. And a little bit of background about BGSA. I know Ben Gordon has appeared in this show before, and Ben is very well known, as highly visible in the industry. So am I. BGSA has a track record of over 50 deals for our clients who rely on our trusted advice and a deep domain expertise. And I think we take a more holistic approach to M&A, not just a transactional approach to M&A. We play a significant role in the transportation technology and AI sector. We differentiate ourselves that probably 2/3 of the technology deals that are happening in transportation and supply chain, probably either BGSA is consulting or BGSA is advising. It's been a fascinating journey throughout my career now getting into M&A space.
That's the best. If you could help people understand where we are at in the economic cycle for a lot of the companies that are in the supply chain space. I see so much where we are always tracking absorption and how many square feet they're taking. That always has to do with how much product there is, or consumer demand and inbound cargo from the ports. And that's what we track a lot of the times. But oftentimes we'll see companies insource and outsource that don't necessarily line up with the economy. That's more of where their business is and a structural change. So I would imagine you see more of the freight recession and what people are talking about of where we are at in the marketplace. Can you describe that a bit?
Absolutely. I think at an overall level, U.S. economy and the North American economies are still pretty solid and are still very resilient. That said, we still have got some softness in the freight industry. The market uncertainty, current tariffs regime, the macroeconomic headwinds have impacted logistics, transportation, and supply chains. Margin squeeze, inflation, volatility in volumes have been the story in the sector since 2024. I think we have a lot of volatility in the sector. I'll tell you, the market is coming. This is not just the tariffs, but if you really go back to a few years, 2019 was near normal year. 2020, 2022, 2020, 2021, and 2022 COVID influenced years with a lot of boosted profits, cheap capital, a lot of M&A activity, valuations were all-time high. And then the fall of 2022 onwards, we started to see the slowdown in the economy, slowdown in the freight market. 2023 and 2024 have been the long and painful recession in the supply chain and logistics sector. The only sector that is continuing to do well and continue to raise capital is the transportation technology and AI sector. But operating companies have really gone through a lot of downturns in terms of the volumes, the margin squeeze. So we have seen some headwinds. Now, in 2025, we were expecting a decent recovery, and then came the tariffs.
Yes, surprise.
And I think the tariffs creates a lot of uncertainty. It challenges the competitiveness in the international markets. It challenges the pricing strategies, disrupting the supply chains, and also it is an economic uncertainty that it creates. Now, that has impacted the supply chain. I just read today about the CAS freight index, which is the benchmark freight index. And it's really depressing to know that the CAS freight index has gone down to October 2009 levels, which is the height of the financial crisis.
Yeah.
So this is the situation in the freight market.
Yeah.
That the volumes are down, and I think overall the feeling that the market is down. Do we have a crystal ball as to when that's going to open up? I don't think I have a crystal ball, but maybe Q2 of 2026. I think the market requires some kind of a tariff clarity. The market requires some degree of predictability in order to really move forward. And I think that right now the freight's biggest problem is the lack of demand and the lack of consumer confidence. And I think that's what is creating this enormous level of uncertainty in the market.
Yeah, it's undeniable. And it's wild to see, like, in the real estate market, like signs of, it's so funny. It's not recovery. It's like just, it's not going down so much anymore. And that, like, that's the good news. And in many markets, like, we think it's the start of the bottom, which is the first inflection point, not the second inflection point. And so it's like, how long are we bumbling around down here? And is this, it's not days, it's not weeks. Is it months? Is it quarters? Is it years? And that's the crystal ball part. So it's interesting to think of, like, is freight still getting worse, or as we think it's like hit that first inflection point? And yeah, it's interesting to watch, because as brokers, we generally don't watch that. We just think of like net absorption, and you like think that absorption in inbound cargo is a substitute for freight volumes, and they should be similar, right? But they're not the same per se. I know what I learned in the last quarter was as I was trying to learn about inbound cargo coming through the ports were having record years. And like only a third of that translates into shipments coming into Southern California, where 2/3 of those shipments go to Dallas or to Memphis or to Chicago or other areas in the country. So you can't really use like the Port of LA or Port of Long Beach as like a bellwether of like how much product is coming into SoCal. That's like a more regional or national like index or like signal that you can pay attention to.
Absolutely. Yeah, I think one of the example of not just the freight volumes, but the fulfillment capacity, all the fulfillment and distribution warehouses throughout the United States and in Canada also. You have seen there's a high level of occupancy right now in some fulfillment major centers like Atlanta in the SoCal area. So that shows that the volumes are not enough to really fill up that capacity. So the rates are, I think in the SoCal is slightly different than other parts of the US. But I think in most of the other competitive places like Atlanta, New York, New Jersey, in Florida, there's a lot of fulfillment capacity still available. And people are not overcommitting themselves to the real estate space until they see the upturn in the.
Yes. I love that you can see that from like an operator perspective too, of like managing capacity and managing like freight capacity or like a warehouse capacity for sure, and like inventory levels.
And these are great, these are good kind of yardsticks to understand where the market is.
Yes. Hard to measure, I would imagine, of like hard to
Yeah,
aggregate perhaps.
that's true.
Yeah, where I would assume a freight demand might be the most like transparent or easiest to measure. And then do you see like we have seen like people who bought during the 2020 to 2022 or 23 levels, like not that they overpaid, but when things started to go down again, then there were people who had a high basis in properties who are now dealing with like lower operating cash flow and like those challenges. I got to imagine you're seeing that in different companies throughout the supply chain area from those acquisitions. Is that something you see much of?
Yeah, I think the M&A landscape is also changing quite a bit with all these number of years and uh, different story in each of those years, right? So valuations are influenced by the financing environment, and the capital structure is influenced by the capital markets. We have seen valuations are tapered off, but what we do see in the market is a lot of structured deals. The deals are structured, the cash at close is impacted, there is a lot of uncertainty. The LBOs are challenged, what we call the leverage buyouts are challenged. The private equity investors, which is more financial sponsors or family offices, are relatively quiet in the middle market. Strategic buyers are very active because they still want those strategic buyers that have strong balance sheets are still very active. The deal flow is rather muted, except transportation technology and the AI sector. We see a good degree of deal flow. Now, I think I'm beginning to have some really good and active conversations with the sailors because all the pent-up demand that people are waiting in the sidelines to monetize, I think now people are realizing if they wait out too longer, they might be losing more value in the process. So I think we believe that 2026 will be the year that the M&A will rebound despite the market conditions. And I'll tell you, a lot of capital and a lot of buyers have typically chased logistics assets, and that's not going to change. I think we believe that 2026 will be a much better year in higher velocity for M&A in logistics. Now, our role as bankers, as advisors, as somebody who can really create more value for our clients is to moderate their expectations about the value and structure. Absolutely. And I'll tell you, we walk away from more mandates than we take because we got to be realistic about where we will land. We are not stuck with a number. We want to maximize the value for our clients. We want to put more money in their pocket. But we need to have a reasonable degree of chance of success in
Yes.
order to get the deal done.
Yes.
The most important thing in M&A, apart from other things, is the market mapping. How do we really define the market map? Where do I take that opportunity or that asset to the most synergistic and the most liquid and the most opportunistic group of buyers? Whether it
Yes.
could be a financial buyers, it could be strategic buyers, it could be strategic assets owned by a financial buyer, whatever that combination is. I think that market mapping and aligning with the sellers about the value and the structure is absolutely critical, because you don't want to chase the rainbow, especially in pursuing a deal. We got to make some realistic expectations with the sellers to ensure that we get the deal at a equitable, optimum value for those folks. So I think right now I believe it's a buyer's market for most part.
Yeah.
And that is why a lot of sellers are hesitating to get to the market. We see a lot of distress assets. The failure rate on the part of the motor carriers and the failure rate on the part of the brokers and overall logistics assets has significantly increased because your operating costs have exceeded your revenues.
Yes.
And most of the organizations are not proactive about adapting to the market changes.
Yes.
So you are seeing, and I'll tell you what, in 2020 and 2022, a lot of these sponsors bought assets. They paid a more than market valuation. They put a lot of debt on the balance sheet, and then your income assumptions went south. So now you got a debt that you have a challenge in servicing that debt, and your income assumptions have gone south, and as a result, your margin squeeze is happening and your cost pressure is coming. So you got double whammy. On the one hand, your debt load is same or increasing or has to service with a higher interest environment, and now your profitability is impacted. And I think some of those sponsors find themselves in a real difficulty in current situation.
You know, in real estate, when that happens, the sign you'll see is that the investors won't have the capital to take care of operating expenses. And sometimes that shows up in like things you see, like the visual appearance, or it's like investing in the roof and replacing it because it's a big ticket item, not investing in like a truck court, or just think of like any operating system within the project. And so when there's this double whammy and you don't have the free cash flow to reinvest, like where do they start cutting corners, or how do those signs of distress show up in companies?
I think that's a great question, Justin. I was a CFO in 2008 at Kelron Logistics when we were hit, all of us were hit by the financial crisis.
That was a tough time.
I think it's not a rocket science to me. What you need to do is to adapt to the market conditions, start right-sizing your business relative to your quality of revenue. And I'm a big fan of ranking your customers like you rank assets on the balance sheet. The top 20% of your customers are going to drive your margins. The bottom 20% of your customers are going to drain your margins, and you need to identify who those are, who those bad actors are, and start to really having some tough conversations.
Yeah.
Your revenue management, your procurement, at what rate your sourcing capacity, your risk management, and your back office efficiency. It's about cash management. Cash is king. And I think the leadership reflects income statements. I'm a big believer that your top quality leadership is able to make those changes relative to the market and change your strategy to remain profitable. In this market, when I talk to so many sellers and owners and founders, the two things that are very important in this market. One is, do you have manageable debt on the balance sheet that you're able to service? Number two, do you still believe that you have a viable business model and you're still in the black ink, not in the red ink? If you are profitable and you've got very minimal debt on the balance sheet, you will live for another day. And you will, when the market rebounds, you're going to be a lot stronger. What we have seen is people who have got a debt burden on the balance sheet and has not been making profits. Those people are under a lot of stress. And I think we see a lot. I think you as a leader or in the C-suite should be able to make those changes. And I'll tell you what, the middle market, which is the highest concentration in the logistics segment, most of the middle market businesses are lifestyle businesses.
Yes.
These are lifestyle businesses. It pays my W-2. It pays me a lifestyle. I can build a swimming pool in my house. These are lifestyle businesses. But when they want to outgrow from the lifestyle business to a growing professional corporation or a company, that's where you need to start. I mean, I'll tell you, this is a HR and a technology business, which happens to be in logistics.
Yes.
This is how I characterize this business. This is really human capital and technology play a very, very dominant role in strategizing. And 70% of the assets that we bring to the market, Justin, are B and below B assets, not A assets.
Okay.
I think there is a lot of mediocrity of the assets that we bring to the market, and that's the nature of the beast. That is the type of assets you have. Very few companies are in the category of A plus, B, B plus, that are differentiating themselves with a value add, with a niche, with a solid management team, with a good technology platform, stickiness of customers, an excellent business model, very growth friendly, very scalable models. And I always say this, if you are proactive, you understand where your next $1 of EBITDA is going to come from, and you start to identify those hidden opportunities, every dollar of EBITDA is going to put $5, $6, $7 in your pocket. So I think that's the logic. So I think people need to plan ahead. People need to be proactive and really start developing the exit strategy in a very methodical manner.
Yeah, I love it because we serve much the same master. We see the entrepreneurs that have built something, and then we see like that eventual sale to maybe a private equity company. And then we oftentimes are trying to make the jump in relationship to the private equity company, still hiring us to do their real estate. And so sometimes we'll see that life cycle and what changes from when it was a lifestyle business to when it's like has a private equity background, and like there's a lot that changes for sure. And so you always wonder if you're going to be part of the change or if you're going to be like part of the accelerant. And so
Absolutely.
that's fun to see that too. I would love to go into the growth sector. If that's where the action is, let's talk about it. So we got transportation technology and the AI sector. And I think I was going through the November or the October report you guys put out talking about the healthcare sector would also be like a growth segment. Can you go through those a little bit of like what areas you're looking at or what deal sizes or like enterprise sizes? And I know reading the headlines and seeing people's like transformations right now, they're all figuring out like end-to-end visibility, like getting their data into like being cleansed and into a manipulatable form to feed all these new systems to gain the insights and the efficiencies. So I totally believe it. I see it. I hear it. But it's interesting to think of like you guys focus on it and then like work with those companies doing deals. Like what does that look like?
I think those are great questions. As I said, BGSA has done more than 50 deals working with the top leading CEOs. We are leading firm to really do deals in technology sector, in AI technology. BGSA is now going to be hosting 20th edition of our BGSA conference in Palm Beach in January 2026.
I saw that.
Yeah.
I was impressed with who is going to be there. I was like, okay, this is the real deal.
This is the 20th year, one of the most sought after events in the industry.
Yes.
More than 400 CEOs are going to hang out. Absolutely stunningly great marketing and networking place.
Yes.
More than that, BGSA runs a Shark Tank for technology entrepreneurs that really help these folks to raise capital and to showcase their business models and talents to a variety of angel and private equity investors and venture capital. To your other question on the healthcare, in transportation, logistics, and supply chains, any vertical specializations are absolutely critical than the commoditized markets.
Yes.
If you are one size fits all commoditized market versus you got a niche, you got a differentiated value proposition or a vertical specialization like healthcare or in vendor pool programs, I think that is very niche, and you'll always get more value from the buyers because it's a high barrier to entry business. Not a lot of people can enter that business. I think our recent deal, BGSA client, SML sells Clarity RFID software to Umedo, was our recent deal. So we have a good, strong pipeline of technology projects. A lot of operating companies are lining up to have active conversations right now. We believe that 2026 is really going to open some floodgates in the middle market. And
Yes.
I'll tell you what, the industry has got some challenges. We are a very deeply fragmented market. I'll give you an example. There are more than 900,000 trucking companies, members of ATA, American Trucking Association in the United States. More than 90% of those companies own less than 5 trucks.
Pretty
So
small.
that's a deeper fragmentation. In terms of brokers, you got 5 super large brokers, 25 large brokers, then you got 700 mid-sized companies and 15,000 moms and pops. This is the level of fragmentation, and it's the same thing with shippers. 65% of the shipper community in the United States is middle market. More than 80% of the shipper community in Canada is middle market. So you'll see a lot of fragmentation. That fragmentation creates challenges and opportunities. When I go to this technology, so when I go to the logistics conferences like TIA, CSCMP, or any of these the signature events, you realize that these are becoming more technology conferences than supply
That's
chain
so true.
conferences.
Yeah.
So I think that is a very critical part of the process right now. I
Yeah,
think
it is.
one thing I want to talk about is the tariffs. I know I touched upon it a little bit, but it's a hot topic right now.
Yeah, please
I
do.
think the overall demand has shrunk until the long-term tariff clarity returns. Trade barriers ease or at least become less predictable. We could see an increase in the volumes moving to the spot market as networks gradually recalibrate. We expect to see the rate of motor carriers brokers exits to accelerate as the bankruptcies are increasing. We don't believe the supply side has any more room on the spot rates, given how unprofitable the spot market already is.
Okay.
Demand destruction, lower consumer confidence are some of the important reasons for the freight suppression, I think, right now. So the truckload intensive consumer spending, like construction industry, is very much impacted. I feel that although the current data doesn't show high inflation impact, we believe it's going to feel sooner than later. We advise our clients to fasten their seatbelts as the ride does not get any more forgiving as we move into 2026.
Yes, that's the part about it being realistic. Yeah.
Yeah, and I think it's whether you like it or not, it's certainly impacting supply chains or disrupting supply chains. It's challenging the pricing strategies, and it's creating a lot of uncertainty.
Yeah. It's a lot left to work through before the growth, like a cycle, I feel like. Yeah. And that's you delay pain most oftentimes, or like that's a common behavior that you see out there in the marketplace, or just like a human nature sometimes.
Absolutely.
Yeah. It is interesting to think of, yeah, 2026 being capitulation is sometimes what people look for, but capitulation is such a bad like connotation, where more of it is like just kind of being realistic, or like when you cannot hold out any longer. So I imagine what causes people to not want to hold out longer is maybe debt maturities. I could see like the bankruptcy part, cash flow, right? Like if you don't, or if you don't have the structural ability to make those changes, that should make you be more, that's the last thing that will force you to be more realistic if you don't come to that area on your own.
Yeah, and I think I don't doubt about the resilience of our supply chain and our economy. Yeah, they're strong economies, especially the U.S. economy is a powerhouse. We are
Yes.
going to see things changing next year. I'm cautiously optimistic that supply chains will restore some confidence in the markets for 2026. 2026 has to be a better year than 2025, and we believe in M&A. I think that will be the case.
Yeah. Is there anything out there that you think is overrated or underrated or overhyped or underhyped? Like the classic example on my mind is like Eric Schmidt at Google, like talking about AI being underhyped and like how the potential there is like so enormous, and he sees it from a different level than other people do. Is there anything that comes to your mind of areas that you think people are like overvaluing or undervaluing?
I think I will talk about AI. I think it's a big buzzword in the stock markets, and I think people feel that there is a bit of a hype in the stock markets about AI.
Sure.
But let me talk about AI in the context of supply chain and transportation logistics.
Yes.
This will be a game changer. And just because the market is so fragmented and it presents so much of opportunities in terms of creating more efficiency and a lights out business model, I think you're going to see AI making a tremendous impact. And it's already happening. A lot of mousetraps being developed in the market. And you'll see, I mean, look at Shark Tank or BGSA in the month of January. It's going to be flooded with opportunities with all these entrepreneurs going to showcase their technology mousetraps and all the great platforms that they're building. But what they're trying to do is to solve a problem.
Yes.
Either to create efficiency or to solve a problem or to create visibility or to create a level of responsiveness that didn't exist before. And technology has been a tremendous game changer in transportation. I mean, I've watched it for over 20 years now. And more obvious now when you go to these conferences and you realize they're dominated by technology. And technology is outpacing regulation.
Yes.
In transportation, in healthcare, some of these industries, AI will be a game changer.
Yeah.
In my view, that's one of the areas that we believe that is going to run with 100 miles speed. In terms of hype, again, I talked about valuations.
Yes.
There was a time valuations were very high. Again, it's a demand supply, and it's the market conditions, the cheap capital during 2022 and 2021. The interest rates were almost negligible. The cost of capital was lower. The leverage buyout was available. So people did big deals with big numbers on the valuations. The financial model supported it. But when these assumptions went south in terms of income assumptions and the debt kept on piling up and the interest rates kept on going up, that is where it became a problem. Right now we are in a different situation.
Yes.
So the sponsors have to adjust to the reality, that the strategics have to adjust to the reality, and I think the sailors and the founders have to adjust to the reality that this is a new, different market, and the expectations need to be a lot more suitable to the current market.
I love that you get to deal with that too. Yesterday's valuation is what is overhyped.
Absolutely. And I tell you what, I think this industry is so interesting. I'll give you an example. In 2017, when Coyote got sold, they did a transaction with Coyote with UPS. Our phones were buzzing and say, oh, it's a great multiple, more than 15, 16 times. Little did people realize that UPS paid less than 2% of the market cap in buying a significantly good scale, critical mass asset that didn't exist elsewhere. So UPS did what they did, and they did it right. But it did not mean that the sailors come back to us and say, okay, what? Coyote was sold for 17 times and we should expect that kind of valuation. No, that's not true. Your financial model has to support, your cost of capital has to support. And again, it's a demand supply. A good asset, I will always say, will go for a good value. An average asset will always go for an average value. So when you have an average asset and you expect the best value, that's where the expectation differences come in. And that's our job. That's our job as operating partners. That's our job as investment bankers, to moderate those expectations with our clients and ensure they understand a reality check. However, we are not stuck with a number. We want to maximize their value. We want to put more money in their pocket. But there is always that reality check that we need to be aware. And if the delta is too big, I think we choose not to work with that mandate until such time the sailors are on board and aligned with the objectives.
Chasing rainbows. I got a good laugh out of that. I have spent some time chasing rainbows, so I know exactly what you're talking. And there's a time to do it, and there's a time not to. Um, I would think AI would make valuing and valuations will change a little bit based on like how do you value someone's AI adoption or maturity. And I guess you can to some degree that it leads to efficiency or it leads to the customer profiles being more resilient. That's something that I would guess is like there will be more to in the future of like as people adopt it, like how does their AI adoption change valuations or how do you like weight that appropriately? I don't know if that's something that's already flown through in valuations, but that's something that comes to mind.
Yeah, and I think that's an interesting question. I personally think that valuations are agnostic about technology and about AI, at least for now.
Yeah. Okay.
And how you deploy that technology and is it becoming a performing technology? Does it impact the freight unit economics? Does it drive an efficiency? What's your cost of acquiring a customer versus your tech platform? What's the cost of assigning a load to a carrier in a traditional versus an AI driven platform? What is the cost of collecting your receivables in a highly efficient AI driven platform? So your unit economics needs to reflect a use of a highly performing technology. At the end of the day, everything needs to manifest into your quality of the EBITDA or a quality of profits. Margin management is absolutely critical. Can you get better rates in the market from customers? Probably not. The answer is no. Can you source better? Can you procure efficiently? Can you manage your internal execution a lot linear and a lot efficiently with the lower cost denominator? Absolutely. And I think that's where AI and technology is going to come in. Because of the fragmented carrier base you have, can you source your capacity efficiently? Can you align your business model of your operations and sales in such a manner that you have repeat loads, you have repeat carriers, and you have repeat customers? That is the genesis of a broker success. I think right now the motor carriers are feeling a lot of pressure because lack of volumes. Their operating ratios are falling through the cliff, and as a result, the operating costs exceed the revenues. But how you deploy technology? I mean, everybody says I have a TMS. Yeah, everybody has a TMS. Everybody has a car to go from point A to point B. The question is how efficiently you deploy your technology. Is your technology suitable to your business model? And what does that do to your quality of EBITDA and quality of earnings?
Yeah.
I think ultimately that's what matters.
Yeah. That's such an adept answer to that question for sure. Like that is a tool, but you can use many tools and it's the result of the use of the tool to some extent. Yeah.
Yeah, I haven't seen in any deal flow that people are ready to pay your premium just because you have a technology A versus technology B. People will pay you higher valuation is because it's a very niche type of business. It's a differentiated business. It's a high barrier to entry. It is a good management team, consistency of performance. We typically look at 6 to 8 quarters of financial results, and we like to see a consistent story, a consistent growth in terms of your top line revenue, your margin dollars, your load count, and your earnings. That tells your story. The more the consistent the performance, the lower the risk, the higher the valuation, and the optimal the deal structure.
Yeah.
It's not rocket science. I'm not oversimplifying, but unfortunately that's what it is.
Yeah, that's when you can take an objective looking across all of them and then start to like recognize the themes and like what's a well-run business in that sector.
Absolutely.
I love it. I got a couple quick fire questions for you as we kind of come to near the end of our
Absolutely.
hour. I don't know if you can share any of the types of companies you're excited to see for the Shark Tank, or if those are anything you're familiar with. I know that the conference is maybe the big to-do that's coming up, But that is fun and interesting to think of like cultivating or curating like startups, founders, and people with like a new ideas doing new things. Are there any that you think you're excited about more than others?
Yeah, I think we run a very competitive process in getting folks selected for the Shark Tank. It would be a disservice if I mention a few,
Yes.
but I think there will be a lot more exciting platforms that will be putting their hands up and showcasing their talent and their mousetraps and their business models in front of 400 CEOs and a lot of angel, a lot of venture capital, a lot of sponsors. And it's a competitive play. Not everybody qualifies to be included in the Shark Tank. And this is the 20th year of the BGSA signature event. And I've always aspired to attend this event, and I'm excited to be there.
Me too, Nikhil. If you come across an extra ticket, let me know. Yeah.
Absolutely. Yeah.
Is there any companies out there in the greater industry that you think are good examples for people to study of like who is one of the gold standard like companies that are in the industry that you pay attention to, or like a study if you think of like Warren Buffett and Berkshire Hathaway, if you think of like investors that people have been studying for a while? Is there any that come to mind that like are your favorite to watch that you admire?
Amongst BGSA publishes our supply chain index every month. I think that is something that gives a very anecdotal and a very good guideline about public companies. I think that's something to keep a good track of. CH Robinson, RXO, some of the public companies, and I've seen XPO growing in front of my eyes. That they first bought the Express One, Brad Jacobs, and they built billions of dollars of a logistics
How
powerhouse.
to Make a Few $1 billion. I love that book that he put out. That's such a good one.
Yeah. So I think we have seen CH Robinson, RXO, Forward Air. I think these are some of the big companies that are out there in the market. But a lot of good companies in the middle market that are promising. But we watch public companies. We watch some of the private companies. Most of our business is in the middle market,
Yes.
and we see some struggles and we see some growth stories. We see inspirational leadership. So it's a fascinating market to watch.
It is. Nikhil, thank you for joining. I really appreciate it. I feel like I probably have 50 more questions for you, but that was a good overall and like so timely now as we're all like figuring out like where do we go from here, and everybody's wrapping up the year and they're trying to get their pipeline ready to fill for next year, and like figuring out where to focus and spend their time to be like to make sure that we set up a great year next year. So I appreciate you spending time and like walking through that, because I think there's a lot that people don't see that you see that like you sharing it is immensely helpful.
Well, it's entirely an absolute pleasure to be on your podcast, Justin. Thank you for your invitation. Much
Wonderful.
appreciated.
Yeah, thank you, Nikhil. I'll catch up with you later.
Thank you.
Yep, bye-bye.
Bye.